FDX is a non-for-profit technical standards body. Our mission is to promote a common, interoperable, royalty-free standard for consumer permission data sharing. My goodness, what does all that mean? Well, just like Bluetooth doesn't build headsets, instead what they do is they write the standards for it, and they have a host the big tent for the parties to come together and all agree, have a mechanism to come to agreement on how they should work. FDX very much the same way. We provide a very big tent, almost 200 member organizations now, to come together and agree. Field one is balanced, and it's 16 characters, not 18, and that sort of thing. So that's really our job as a facilitator of this driving market need to share data in a secure, interoperable, free way.
Man, you must have learned so much as you're going through this in terms of being able to put something like this together. How did your background inform what you're doing today?
Sure. I've got 23 years in banking and then some time before that in fintech, different things, everything from running a military bank online, which was a wonderful experience, but you had this very diverse and distributed customer base, and so you learn to be flexible and you learn to understand what their needs are and how to meet their needs. And so that really helped understand what some of the needs were. That's where I got familiar with data sharing, because you have somebody who changes bases, they rotate frequently. And so they have accounts at different locations, plus their spouses or the other family members might as well. And in order to pull together a common financial picture when their kids are applying to college or something like that, or they're applying for a loan, you needed firms like Yodlee or Finicity or now Plaid or MX to come together and pull that data together in one spot, because it was just too difficult. So the need's been around since the late 90s. It's just we're now pivoting to a much more modern, more efficient, more secure way of doing that with APIs and the FDX API.
Awesome. So you mentioned these technical standards. So I guess why is it so important to have common financial data standards for the marketplace?
Sure. Do you remember not too many years ago when if your phone needed power, well, you had one of, I think, 6 or 8 different choices for a USB or for a cabling, and now we have USB-C.
Yeah.
Wow, isn't that great? But everyone had to agree on that. So imagine if you're a startup fintech, especially those who don't attract a lot of seed funding, and you want to offer some new or wonderful service to your end clients. But the only way you have to do that is connecting up to a bunch of proprietary connections at all your data endpoints at banks and brokerages. Well, each of those connections needs care and feeding. That takes time and resources that you may not have. And so by having a common standard, I've reduced the resource burden on especially the new startups, who, by the way, a lot of them are led by persons of color or female-led. So this lowers the bar to entry, so we have more ideas coming in the marketplace, more competitors. And again, they don't worry about the tech so much. They worry instead about what their value add is. And I think that's the right way to spend those precious seed funds or those bootstrap funds.
Awesome. And I know there's different approaches to open banking, open finance that we have here in the US versus the European approach. I guess, can you help us understand how FDX approach is different from some of those other approaches? And does it need to be one or the other? Is it either a regulatory sort of push like we had in Europe, or a market-led one like we have in the US? Or is there some type of hybrid approach that could actually work better?
Great question. Now, as a tech standards body, we're prohibited by charter from commenting on policy or legislation. But we do see a deference around the world to letting the engineers and the market participants develop the technology. The regulators have either figured out or are figuring out that there's no upside to picking a tech stack. If they get it right, it's kind of invisible and no one really cares. If they get it wrong, they'll be blamed. So if you do the Monte Carlo simulation, that doesn't work out well. But given there isn't a strong mandate or government-controlled regime here in the States, there's still that market need I talked about that's been around since the 90s. And so the market participants have put together a framework of, okay, how do we do this? How do we do it at internet scale that's affordable, it meets all the existing requirements around security and good data handling, and again, for as reasonable cost as possible. You see other drivers in other jurisdictions who are trying to solve, for example, payments. Is a primary driver for most of the other jurisdictions, because they aren't awash in the payment mechanisms we have here in North America. We're have an abundance of riches with respect to that. But you see a certain stalling out. Now that they've done that, you see regulatory regimes going, do we do anything next? What is next? And they're starting to backfill and move from open banking to open finance. Whereas in North America, we primarily read APIs and we were looking at, well, what's being scraped today? And so we've, from the get-go, had checking, savings, auto loans, credit cards, home loans, mortgages, pensions, 401ks, retirement plans, RISPs, and the like, because we had to address that. We have over 620 data elements in our spec. It's the Sears catalog of data. And I think that's the big difference, is market-driven versus a regulator setting on one issue to solve. And I think, and that's fine, and that's great, as it drives adoption. When your regulator says do something, do it. But we're seeing so many new entrants coming into this market-driven one. Anyone can use our spec; it's free of charge, and that's why we've gotten to nearly 200 member organizations, and probably another 200 who are non-members are using it.
Are there some learnings, I guess, that even though we've taken a market-driven approach and the FDX has taken that way, that you can learn from Europe, or that that I guess have some applicability here?
Absolutely. Our friends in Europe and in Australia and to some extent Brazil have been very open about what they've learned, what they wish they knew. For example, having certification to the technical aspect is very important. And so we are standing up a certification suite. So because what I've been told is, even though you had the CMA 9 banks and they all agreed to a common standard, they implemented it slightly differently. It's not like, people have different recipes for spaghetti. It's the same basic ingredients, but everyone's a little different. And so you found out if you wanted to connect to the CMA 9, you technically needed 9 different flavors of connection when it was ideally supposed to have been one. And so we took that to heart. And so that's why we're building our certification suite, so that fintech, that startup, Don and Zach's fintech in a garage, or can point consistently to 2 through N, and it's the same every time.
Can you tell us a little bit more before we move on to the next question about that certification program, what that looks like, or what your thinking is around there?
Sure. It's going to work a lot like a Bluetooth stack. So what you'll do is say, okay, great, I'm a data provider, I'm a data recipient. Here's how I interact with the spec. And so we'll say, okay, great. Can you hit our test instance, and can you have properly formatted JSON request responses based on this fake bank data we have set up here, or fake brokerage data? Making sure you can handle error messages, that you're connected properly, that it's efficient and follows REST, that sort of thing. And you can do the FAPI connections, the security connections, and you play well with the OAuth tokens underlying the FAPI connection. So once we're comfortable that you can do all that, and we have the logs say, yep, you do, then we'll probably issue some sort of badging in our registry, which is sort of a giant yellow pages of all the serious people in open finance. And you'll be able to hang out a badge just like you do on Page Bling. If you get your site will have a Page Bling if you have your PCI audit or something, very similar, and say, okay, yes, you've certified against the main catalog, or maybe the tax catalog. And that's an important thing to differentiate yourself from others in the space. Say, no, I've taken the trouble to pass this test to show my technical chops.
So I'm curious, just like when you started that certificate, where are you along the timeline in terms of certification?
We're in the process right now of standing up a sandbox and a reference implementation, sort of a gold standard. We had to set it up a couple of different ways. One, we need a fully functioning instance, and we're in the process of standing that up now. But 2, we also containerized it, because we have some members who just want to pull that Docker down and play with it in their own DMZ. Fine. That's just the way some folks roll. So we had to build basically both. We're still setting that up and making sure it meets everyone's security, because they're going to connect to it. It has to meet their enterprise requirements as well. When you have 9 of the top 10 US banks, all 6 of the DSIBs in Canada, their requirements for how we build things out to enterprise scale are pretty good sized up front, but that'll be better on the long run.
I get it. Let's switch gears to the API, and love to hear your perspective on how your standards have evolved over the years.
Sure, it's evolved as our membership's evolved. I mean, we started under the FSISAC, who is a primarily cybersecurity and probably the premier cybersecurity signals intel sharing group for financial institutions around the world. And so they were concerned about some of the privacy concerns. So when they initially drafted version 1 of the Durable Data API, it was primarily focused on checking and saving, credit cards, and consumer banking, and that was effectively it. And the number of fields was a lot smaller, and some of the ideas of certification and how to have user experience flows really didn't come to mind. It was strictly a data play. Now that we added a lot of the fintechs on, and really 2/3 of our members are not banks, we have this great, robust, holistic end-to-end in the data chain view of things. Our user experience group is probably as large or larger than our API group, because the taxonomy of what you call terms, the visual design elements we're recommending to our members to right balance that positive and negative friction during authentication is crucial to keeping members, making sure keeping our members, customers engaged and getting them through the flow and not having abandons in the process. So that was a big pivot away from just straight up data fields and maybe the security group to also talking about certification, talking about getting artifacts, talking about user experience, taxonomies, and other elements as we've gotten into it. It always talked about, OAuth 2 and those extensions for security and authentication, but even within that spec, some data elements, there were a need for other data security. So we've started looking at other types of security. For example, we had a task force on homomorphic and polymorphic encryption to explore that. I was not aware of that 2 years ago. So there's a lot of great ideas involved. And when you have 200 members coming together on a routine basis, there's so many wonderful ideas to look at and ways to improve the space.
So my next question has to do with sort of the membership. Can we just take a step back and be explicit about who those members are? You mentioned 200 members. You have fintechs and FIs. Can you just talk about who comprises the membership base?
Sure, about 191 as of this morning. So we have a number of traditional fintechs, which you would normally expect. We have all the major aggregators in North America. They call them data access platforms. We have, I think, all the bureaus. We have one of the GSEs. We have consumer groups. I can't disclose who those are, but we have consumer groups. We have professors and individuals, academics in the space as well. We have fintechs from literally pre-revenue stealth all the way up to large $100 million, $200 million fintechs. We have, again, the financial institutions. We have 9 of the top 10 in the U.S. We don't have Boney Mellon, but they don't really have a lot of consumer-facing stuff. We have all 6 of the DSIBs in Canada. We have American Bankers Association, Independent Community Bankers Association. We have LCUC and CCUA in Canada, so we have the credit union associations. We have some small credit unions as well, firms that are highly innovative and punch technologically, I think, well above their weight, which is amazing to see. I come from a small banking. That military bank I was with was about $1.2 billion in assets. So you were just nimble enough to do things. So I'm always rooting for the folks who are getting on the call and who wear 3 or 4 different hats. And it's fun to see that viewpoint when they're talking about things.
Well, it sounds like you also wear a few different hats in your role.
Chief cat herder.
Yeah. So given that diversity, I guess, of your membership, I guess, can you give us some feedback on what it's like to get to agreement on standards, and if there are elements that are harder or easier to get agreement on?
Well, I think with any topic that people are passionate about, serving their customer, keeping them safe, and making sure they're served quickly and with quality data, you get some passionate arguments and it's really all about how do we solve this for the customer. Notice the we and the customer. And I think that's the cool part about it. And I will give my members kudos. We have some very grown-up discussions on some difficult topics from time to time. And we do so politely, professionally, with that mindset and lens in mind. So that's important. But at the end of the day, we have a level of governance. We follow the IETF model. So you'll say, hey, it would be great if we had a field for this, or field so-and-so needs to include, let's say as we expand outside the US, postal codes that have numeric or alpha characters in it. Hey, it's a good idea. So you present that in the working group, that gets voted on. Yay, goes up to the task force to just basically a general level of governance to make sure it doesn't break any of the other work that's going on or overlap with that. And then it rolls up to our board of directors. Again, it's a diverse board, balanced between data recipients and data providers. And we always have that balance at every level in the organization. And I think that's key to make sure no one side feels disenfranchised and everyone has a voice at the table. So we've been able to make agreement on items of common purpose and move forward with that. And it's worked rather well. It's how we got to 620 data elements and growing.
Is there a rotation of the board?
There is. A set of non-founding board members do have term limits, and they will rotate off. And anyone can nominate themselves up. If you're an FI, nominate fellow FI. If you're a fintech or a data recipient, you would also go up. And again, we put forward a portfolio. There's a group of members who make a decision. FDX is not involved. We facilitate it, but it's really on them to weigh out the candidate packet and then make approvals. So we do have rotation, and that does seem to work. We agreed on that. I think when we founded, we said we wanted fresh voices to come in. We wanted the ability to look at who's involved the most. And so I think that's important and healthy.
Awesome. And I love that you're still holding the USBC cord.
Yes. It's a handy metaphor as a visual tool, and everyone's familiar with it. So I try to have it handy in the Bluetooth example.
Can you work it in again? I think it's some another example. Well, so while we're on membership, I want to drill a little bit deeper. How do you expand that? So I think the last time you were last year's DataDay, I think you had 170 members. Does that sound right? Maybe. How do you expand the membership, and is there a network effect for every new FI or fintech that you bring on that it sort of extends to their ecosystem?
I mean, there is a networking effect. We want to get to that point where we've developed a spec and a framework that's high enough quality and flexible enough that people want to be here. And then people are here because everyone else is here. I think that's a testament to quality. So that's important. So we have to address what's in it for me. And again, why do members want to join? And everyone has a slightly different reason for joining. They want to address, held away credentials. They are a data provider and they want to get more robust, more highly available data. Or they're a fintech who really is large enough now they're ready to have a direct connection with a data source. Or anyone in between, or academics writing in the space. So I guess addressing the WIFMs are important, understanding that it's a big tent, telling the story of FDX, being a not-for-profit with no commercial interest really checks a lot of boxes with prospective members. Having consumer groups and academics also looking at our stuff and having full voting rights, mind you, also I think is important and checks the box in due diligence as firms are kicking the tires on FDX. We've had inquiries from other regimes, other jurisdictions going, how did you get so big? How did you get so many users? We have 16 million consumer accounts already converted with no mandate. And so they're looking at this voluntary model of, maybe we could do something like that and involve more of our tech space and grow our tech startups faster by doing this.
What are some of the activities you do to expand membership? Obviously, you're here. You're talking about the FDX. You're ringing the bell at a lot of conferences. Like, how do you get the word out? Good
question. I was just pinged by a friend of mine that we were just over 100 last year, so we've effectively doubled in a year. That's a pretty good compound annual growth rate. As we publish items, as we have members using the spec, as we show up in members' onboarding portals, as we engage with regulators, I was really pleased in the CFPB, the ANPR, the Advanced Notice Proposal Rulemaking that was just put out and that your prior guest was talking about. There were 99 responses. 37 of them mentioned FDX, all of them positively. That's a third of the respondents in the ecosystem, saying good things about us. So I think things like that have really the networking effect, and we try very hard to make sure there's no downside to being associated with us. But remember, our spec is free. I probably have another 200 organizations that have downloaded the spec, have promised, signed a little EULA that says I won't try to patent it, I won't do anything illegal with it, and they have a license to use it at any production volume they want. So even though we have almost 200 paid members, we have another, 200 users of it that may never join, and that's okay. We're just trying to move the ecosystem to this new modern API-based architecture.
I get it. So given the diverse membership that you have, like, how do you encourage collaboration versus competition in such a highly competitive market like financial services? And is it one or the other? Can both occur simultaneously?
No, I mean, if you've heard of co-opetition, and again, we're very strict about antitrust, and we read that preamble before all our meetings. But the deal is, people are competing on product, price, service, delivery, quality, value add as trusted advisors, or even the data sharing space, being able to enrich the data, being able to provide the larger network of those firms. And so it's really competition on services. There's not a lot of competition within data specs because those are the rails, and people just assume those rails get out there and be common because it reduces everyone's costs and it creates replicability and expectations, common expectations, so that you can plan around that. So it's actually a worthwhile thing, but people still can compete on items. But around the tech, again, it's how do we serve the customers better, faster, higher quality data, more robust? And this is just one way of doing it.
Can you begin to see, given the few years you've been at this, the effects of the FDX in market? Like how has the market changed given your influence on it?
Well, we're starting to see some forward-looking firms, and I'll pick on the FIs, realizing that they're not just data sources, but they're also consumers of data. Wouldn't it be great if Zach's applying for an account at my bank? Wouldn't it be great to go ping his old bank and say, "Yep, he's got an account there. It's got a certain dollar amount. It's got a tenure of over such and such, and there's 2 years worth of transactions." So the odds of it being a synthetic Zach and not real Zach, it'd be great. Now, is it a slam dunk? No. But remember, authentication is just preponderance of signals that more likely than not, you are who you are and aren't a fake person. And so they're looking at, gee, that would be great. Or I could pre-populate this application and speed people through the onboarding funnel and have less abandons. And that means greater sales. You're seeing things like Experian Boost. You're seeing other, if you will, cash flow based credit decisioning happening. And so it's extending credit to more people. So it's really opening up more customers. It's allowing to serve them faster, but with higher quality decisions. No one wants bad decisions in credit granting or account opening. It's bad for everyone. So you're seeing it really improve all of that. And I will point out one thing. When online banking rolled out, it was supposed to be a product. They even tried monetizing it, and it raced to zero and eventually became a channel. Then mobile banking. Oh, it's going to be a new product. Turns out it's a new channel for reaching customers. APIs is going to become a net new channel. And it's not just for the consumer stuff we see today, but I ever see a lot of direct, now that these rails are down, I see a lot of corp to corp stuff going out over this for other areas. Why? It's secure, it's common, it's understood, it's enterprise grade. So it's my crystal ball and where we're going. So I know you always like to have one crystal ball projection. That's kind of mine.
So maybe not crystal ball it, but talk about brass tacks. What's next up for you guys at FDX and you personally?
Well, like I said, we meet twice a year. We have basically a developer, or rather a member summit twice a year where we try to get together and share best ideas. Now, we meet frequently. Obviously, these working groups are every couple of weeks, but that's the next up. We have members on 4 continents. We're constantly adding to this spec. We're constantly looking at how to improve this, how to add more usability, try to see what does the market want. So we're polling our members pretty much on a very frequent basis. We just released our member strat survey. What's prioritization for you guys? We're big, obviously large in Canada, but you look for us right now. We're trying to, is an ecosystem, if you will, utility, set up a certification work group. We're going to be setting up a registry and to help a lot of members really start their adoption or enforce their adoption journey, because we're all about adoption of the spec. So our primary focus right now is on adoption. So you'll see those 2 big milestones in adoption coming up. And then from there, it's really about getting the word out, making sure it's fit for purpose wherever you want to take it. We wrote this spec not to paint ourselves into any one corner. This would work in GDPR in Europe. This would work under CDR in Australia. This would work anywhere you want to take it, because a lot of our members do business in more than one jurisdiction. And we've had the luxury of being able to shop the planet for good ideas. And they've been very friendly and gracious. And hey, you ought to think about this, or here's what we wish we knew when we started. So I'm grateful. So tip of the hat to them for sharing their learnings with us.
I have one last question and we'll let you go. Given your membership structure, I'm curious, do your members rotate the representative they have on the board so that like multiple divisions get exposure to the FDX, or is it typically a dedicated person?
The way it's typically worked, to get up to speed, you typically have a primary board rep and a secondary for an organization. So an organization, XYZ Bank or ABC FinTech will hold the board seat, and they'll have a primary and a secondary because that person may want to take vacation, God forbid. But there's so much going on, it's difficult to ramp folks up. So what we see these firms doing instead is having their other folks, I don't want to say more junior, but other folks in the organization involved at the working group, in the committee, and the task force level to learn about these topics kind of organically. practice leadership skills, influencing skills. And this is a great, not-for-profits are a wonderful leadership lab. I encourage everyone looking to make that next step in their career, use not-for-profits like FDX as a leadership lab to try out things. Those learnings are then transferable back to your organization. And then we do see, as we had, we had one of our board members who left and went to another company. And so primary became secondary, and one of the people who was involved in one of the work groups and task forces actually became the secondary. And so you had that nice bench development going on so that the organization didn't lose any impact while they're trying to get up that learning curve. And so that's really a best practice we've tried to keep going.
Appreciate that. Don, always a pleasure talking to you. Thanks for joining us at Day to Day.
My pleasure.